What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, today we're going to talk about Mogul's latest listing, the Bosworth. This is a, what is this? 7-bedroom, 8-bathroom. What? It doesn't even say it there. Let's look at this. Let's look over here. It is a 7-bedroom, 8-bathroom. Look at that. I remembered. Short-term rental in Broken Bow, Oklahoma. I just got done in a recent video talking about I'm just not going to buy any more short-term rentals on Mogul because my pad splits are all killing it on there and my short-term rentals are all doing terrible. And here comes this listing, and it's really making me question if I'm going to stick to that. So let's jump into this. Okay, so a couple of things. It is an operating short-term rental. There's $245,000 in confirmed bookings for next year, or actually for this year, 2026. They have, this is one where they are saying, they're projecting, I think, $312,000 in top line revenue in the first year, and it's done $385 in the trailing 12, something like that. So this is one where they seem to be really, being conservative in their projection of the income, especially because they're keeping the same manager. We've got a big chunk of bookings already. We've got a history of making more than what we're projecting. They have this comment there saying instant equity because it's purchased $275,000 below list price. This is one I don't necessarily agree with. I mean, we'll have to look at the... I'm not saying that they're wrong, but purchasing under list price doesn't mean that you have equity, right? I can list a property for whatever I want to. That has nothing to do with the actual value. Now, maybe they're getting a good deal on it. This is one that was really hard for me to find any real good comps on, and so that's tough. But I think just saying that this creates instant equity because we're paying below list is... that's just false, right? But whether or not they have instant equity is debatable. The fact that it's purchased below list, implying that they have instant equity, is what I'm saying is false, right? So I don't love that, but I think that a lot of people think about it that way. They're like, oh, we got a discount from what they were asking. That's a deal. Well, it's not always a deal. Maybe they're asking way too much. Average yield's a little bit higher than most of them we've seen recently, right? 8.39 is higher than almost, I think, maybe all of their recent listings. I think, low eights. I'm not sure. Maybe those I think it is, but I'm not positive. And this is with their, projecting lower than their past. So a lot to like about this one. You look at the property itself. It's a very attractive property, although if you look at the color of these trees, this is very clearly, enhanced photos. I don't even know if that doesn't appear to be real fire in the fire pit. But, it's got this pond, it's got a pool, it's got the outdoor chess. It's just this gigantic, property, all these balconies. Like, this was really just built, I believe it was purpose-built to use as a STR. And then, you've got your outdoor fireplace, TV out there, then the same thing inside. There's a ton to like about this as a short-term rental. The downside, if you've heard me talk about this before, I don't like buying short-term rentals in markets that are just purely vacation markets, right? If there's an issue in the tourism industry, there is, the chance of selling this to an owner occupant anywhere near the price we're paying for this is, close to zero. And what is that price? $2,225,000. And again, it was listed at 2.5. The listing agent, I think, has I love that they're doing this, right? Putting what their gross yearly income is, and okay, this is slightly, I think the email said 385. I think we're just rounding there. They're showing the money that's on the books, their average monthly gross revenue. Like, I haven't seen very many listings for sale that were good like this, where they are showing actually how that income is going. Now, okay, the fact that they have income on the books, the fact that they are projecting below what they had been in the past, I love both of those things. But I wanted to point out, I've talked about this quite a few times before. I think they're projecting, 312 in revenue the first year. And I've looked at this, right, like 312 divided by 2250. We want to look at the revenue to price ratio, and that's below 14%, right? If you remember, in my market, I like to try to get very close to 20%. Sometimes we're at 18, 19, but in low teens is really hard to make it work. Now, part of that is our income tax rate, or our property tax rate may be a little bit higher than theirs. I actually didn't look up their property tax rate. But in general, a low teens number there is really hard for me to swallow. But if we look at the 384 150 to 17%, I mean, now you're buying this place, it's income or in place income 17% in my market. This would start to get my attention, right? Especially because when I'm looking at these, I'm typically looking at projected revenue, not what it had been doing. I'm looking at, okay, I still have to buy this, furnish it, do all those sorts of things, right? Not buying in-place income. So at this number, this makes a ton of sense. And seems we're talking about the revenue, let's jump into the AirDNA numbers. This is one thing that bothers me quite a bit, is when I look up AirDNA and it's showing, okay, the actual trailing 12 revenue that they recorded is only 300,000, right? And they're saying, well, we didn't pick up 22 days of revenue, and we think maybe you could get to 323. Whenever these numbers don't match up with the historic numbers or the advertised numbers, like that, the listing agent says they make, I would love to know why, right? In those 22 other days, were those the best days of the year? If you look on their calendar, there's a lot of days where they're getting close to $3,000. So, let's see, what if we did 22 days times 2834, which is this price here? Okay, that's another $62,000 in revenue. And yeah, so then if that would get you very close. I mean, still not quite there. So that's I think it's possible that that's what's happening. I just never know when AirDNA doesn't pick up everything. But one of the things that made me a little bit worried is if you look on the map here, there's nothing else in this area doing, anywhere like even close, right? I mean, nothing else over 200,000. So that's, over 300,000. So that's pretty scary. When everything in the area is, I like to be the very best property in the area, but I don't want to be, beating the next one by so badly, right? I want to know that it's not just a fluke. But at the same time, if you look at this property, it's just a amazing property, right? We've got all the stuff that you'd want. Let me look at, this little pond. I know you don't see it in the picture. It's a pretty big pond that you've got there, right? It's not like sometimes you see these, and if you see this little corner, you have no idea how big that is, right? Like how. Let me see if I can. No, it's not going to. I just made my computer freeze because I'm switching tabs too fast, and it hates doing that when I'm using my screen recorder. So I'm going to give it a second. There we go. So there's a lot to like about this property. That the 17% based on the revenue to price ratio based on the listing agent's claim of yearly gross income. I could live with that. If I did the math based just on the, what do we have here? Just on the AirDNA number, what do we get? Let's see, 323, 1, 2, 3, divided by, 2250. What am I doing here? Is that right? Did I put the wrong number in all those other times? I think I did. I think I was putting, I think I was $50,000 off on all those other numbers, or 25,000 off. But anyway, I think it's close enough. Equals. Okay, that gets us to 14.5. If I just trust this number, I mean, again, that to me is low. It's not terrible, but it is, I'd like to be higher than that. So, it comes down to how much do I trust this yearly gross income number? And obviously their Mogul is counting on a much lower number. They're counting on this 312 to hit their numbers. So why do I care about this revenue to price ratio being so high? Well, what I found in our market is, if you need to have this really high number to have this sort of margin of error, right? Because short-term rental income does fluctuate wildly. If you don't have a very high revenue to price ratio, in your bad years, you're going to have a lot of trouble. So I'm trying not to sneeze here. And I think that we've already seen that on Mogul, right? We've seen that their short-term rentals that are underperforming are doing horribly. Like I have several that have had no income for quite a few months. Now they're doing a lot to try to fix that, but so far, they're dragging down the rest of my portfolio. This property looks amazing, but it's just really hard for me to get on board with that. I want to look at the market a little bit, though. Broken Bow, Oklahoma, it's a tiny market, right? Only 4,000 people. I thought this was kind of interesting. They actually had a population decline between 2000 and 2010, and then slight growth. We're actually not even back to the 2000 levels, right? It's like a couple people lower. Now, if you've watched many of my videos before, this is really important to me when I'm looking at long-term rentals or pad splits. For short-term rentals, I don't think this has nearly as much to do with the, population growth is not the same driver of demand as it is, when it's actual housing, right? Like this is a vacation spot, so the population in the area doesn't really matter, but it does make you, again, just really think about, okay, if the short-term rental market slows down and we needed to sell this to an owner-occupant, it's not a very big market. There's not a lot of demand for the market. I think it would be, we'd be in a lot of trouble. This is the county that it's in, and so I wanted to look at it. Well, how's the county doing? Is it growing or shrinking as well? And the county has actually been shrinking for the last couple of decades. So that's not great news. Again, I think it doesn't have a large impact on the tourism there, right? But I think underlying asset values is what it worries me about. And so a little bit more about the market, and then I do want to get into that asset value a little bit. I pulled up, this is the submarket, Hochatown, I don't know, on Broken Bow Lake. And 91 is a very strong score for this. So, looking at where that's coming from, I mean, it's not terrible for seasonality, which I thought was interesting. Regulation is their worst number, and I mean, this is clearly a short-term rental market, so I'm not too terribly worried about that. And I don't know that I've ever seen 100% investability. So this is actually really promising, right? Like whenever you're looking at these markets, this is just shocking to me. Except this is really bad, right? Okay, we've seen annual revenues been up, but total active listings went way up, and so average daily rates in this market came down 4.8% in the past year. This might be one of the reasons that they're trying to be, that Mogul is trying to be conservative with their projections, because if they're seeing average daily rates decline, then of course, hitting last year's numbers might not be achievable. And that is, I mean, that's a big decline for a year. But if you look at it, okay, yeah, they have 10% more listings than a year ago. So I do always worry, like, especially when you look at a market like this where you have a lot of places to build, right? Oh, okay. Well, I got to exit that. I don't think you guys can see that, so that's good. You have plenty of room to build, right? Like there's virtually no barriers to entry other than just, the physical limitations in the construction costs. And so, you could imagine that whoever built this home, which is pretty recent, right? Built in 2025. I'm sure this builder is still in the area, right? So they could build another one this year, another one next year. And how many of these properties can this market absorb, right? That's a question that I always have. Now, you do have this little lake here, which is a nice, physical feature that you're not going to have on every property. Although, I could imagine you could build one right over here. Weirdly, we don't have the little lot lines that you have in a lot of places when I zoom in. So I don't know exactly where our property starts and stops. But yeah, having this huge increase in total active listings, for me is something to worry about, even though you do have a very strong submarket score. And I am just not having the best word day today. Sorry about that. So yeah, I think there's both good and bad in this market. Obviously shrinking average daily rate's not good. Increasing annual revenue though, like it is, and it's because the occupancy rate has increased quite a bit. And that's sort of counterintuitive. Like, how is our occupancy rate increasing when our total listings are also increasing? And I think the answer there is, I don't know what I did. I clicked on something. Having a lot of problems today. Obviously that's a good illustration that there's plenty of demand in this market. So lot of things to weigh against each other. I think. The last thing I want to talk a little bit about is the valuation. So Zillow, none of the third-party sites are giving me a valuation, probably because it's currently listed. Sometimes Zillow will give you this like little chart that like cuts off right when it was listed, and I don't even see that. In every market, the way that they interact with the public data is a little bit different. So I guess this is just one where you really can't get anything. So I have a really hard time coming up with a value. I looked at the purchase contract. I didn't see an appraisal contingency. There's a mention of a supplemental financing document, but then that's not attached. So I'm assuming in that document is where we'd have some contingencies for appraisal and financing. But that's an assumption, right? I'm just making that guess. If you were going to buy some of this, I think it would be a good idea to verify that with Mogul, right? I'd hate to be in a situation where you don't have that appraisal contingency. They typically are getting one, but I just didn't see it in this document. And I could also be missing it, but I think it's in the referenced financing supplement that was not attached. Okay, other than that, the only thing, I spent some time looking at Homes.com trying to find other properties in this market that sold, that would be this is the most expensive property I could find that I think is a true comparable. Very close in square footage. This sold last year. The lot size is a little over 2 acres, so a little bit bigger lot, because I think, how big was our lot? It was 1.5 acres, so a little bit bigger, but and so this it sold, and it says 1.7 million. I don't know that that's the actual sale price, because a lot of times on Homes.com it's actually just showing you the last listed price, not the actual sold price, and I'm not sure how to figure out if that's the case in this situation or not. So, this is $500,000 less than what our property is selling for. Now, okay, it's missing 200 square feet, right? It doesn't have the pond on the lot. It doesn't have a pool. And it's not, just so clearly, this appears to be, maybe this is a short-term rental, but not in the same, like, over-the-top fun type of one. This is like this could be a home that somebody just uses as their own vacation home or that they live in. I don't know. It's not, it's clearly the style is just not the same. It's not for the same market. Oh, that's a really nice bunk bed, though. I didn't notice that. So maybe this has been being used as a short-term rental. Whenever I see these built-in bunk rooms, I always think it must be a short-term rental. But they're just going for a much different look and feel. And they have a hot tub, but amenities-wise, they're just not matching up whatsoever. So, I don't know. Is it worth $500,000 more? I think it's a tough, it's a tough jump to make, but at the same time, I don't know what value I put. The pool, you can easily say, okay, building a pool out there, and especially it's a nice size pool and whatnot, easily $100,000 in value in a lot of markets. Now, in a market like this, I don't know what their labor costs are. I don't know. It's a small market. Where are their vendors actually coming from? But that's, I don't think that gets you the whole way. But the lake, I think, is just an amenity that it makes it virtually impossible for us to make a good apples to apples comparison. And so, yeah, my general answer is this is worth what somebody's going to pay for it, right? Because if somebody wants the home with the lake, the whole package, and most likely short-term rental investor is who's buying this. And so in the future, unless you start to see some comps that have that same amenity, I think it's virtually impossible to say, okay, we're paid too much or we didn't pay enough. And so, okay, the listing agent thought they could get 2.5 and they couldn't, but maybe, we're getting a discount from that. That's, I know this isn't a great answer, right? But sometimes it's just valuing a property when you don't have a large number of comps in the area. It's just really tough. So let's see. Let's close this up. So what am I saying? Like what, obviously I'm just sort of talking around it. I don't think that it is that we're necessarily paying too much. Like this isn't one where I'm like, oof, we just are overpaying for this. But at the same time, it's the most expensive one that's anywhere close to that. That's within the same size. I wonder if I go up and start to add some bigger properties even. Okay. So this one's quite a bit bigger. You got 2.2 million. This one again, 800 square feet bigger. It's selling for less. So yeah, that didn't really help the case very much. This one, 500 square feet bigger, sold for. This one actually maybe starts to look like a good comp, but we don't really have any pictures or anything to know. So I don't know. I don't necessarily think we're overpaying, but I don't love that whenever I can't come up with a price that I think it should sell for, it makes me a little nervous. I got a couple other things, but before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please feel free to use those links to check out those sites, to look at any of the properties that I talk about, but do your own due diligence on all of it, right? Just because I provide links to a platform, just because I'm investing on a platform or investing in a specific property, doesn't mean it's the right answer for you. You want to do your own due diligence. And just because I pass on a property doesn't mean that it's not a good investment and that you should necessarily miss it. I'm just trying to share my experience, my thoughts, how I'm doing on these different platforms, the way I'm going about it. But you really, none of this should be taken as this is what you should do, right? You want to do your own due diligence. Also, in the description of this video, I have a link set up to a Discord channel where a whole bunch of us are, in there every day talking about lots of different platforms, lots of different properties. Please feel free to join that. There is no cost. It's not a sales funnel. You might get contacted by someone who looks like me who's trying to sell you stuff. That is a scammer. Please report them if you do. I'm never DMing you trying to sell you anything. if you ever get a DM from me and it's not just me saying, hey, do you want to come on the channel and get interviewed? That's one of the reasons that I've DM'd people in the past. But in general, I'm never trying to sell you anything. I'm never trying to do anything like that. And even as far as, for the most part, if we're not interacting in the chat first and you get a DM, it's just not me. So just please keep that in mind. But, and speaking of the Discord, we had a couple of people share some due diligence that they did on this. And so thank you guys for doing that. Whenever we have people jumping in there, Mogul is one of the threads that on there where there's always somebody sharing some stuff. It looks like this is the management company. So I thought that was kind of interesting that currently has this property listed. That's one of the things that I'm not, and it's called the Bolt House on Boulder Lake. It's one of the things that I'm not doing often enough is like digging into, okay, who's managing this property? Because they did say, yeah, they're going to continue to manage it. And so I thought that, sharing that link was helpful. And also somebody found the Airbnb link for it. It says it sleeps 30, right? Which is amazing. Looking through it, it makes sense. I mean, there's just tons of beds everywhere, a lot of king and queen size beds. The fact that they mention it's new does make me, it is a brand new property, and I think that that's both good and bad, right? It's very helpful from the perspective of you would expect that our repairs and maintenance budget in these first couple of years would be lower than usual. But at the same time, just like we were talking about, if somebody's in this market building these, amazing short-term rental properties, this is not the type of thing that somebody builds one and then you never hear from them again, right? Like, they're going to build our competition next year. They might build several, they might start to build several. And so, being in a market like this with very few barriers to entry, where you have just all this open land, your only real moat, and I think it's, no pun intended, but is the lake, right? Like, not every property around here is going to have that amenity. Virtually everything else they can copy and rip off and make a better version of, right? Like, I mean, there's nothing, even though this home is amazing, well, they've got the blueprints, right? They could do this again a bunch of times and improve all these little things that they thought, oh, hey, next time wouldn't it be cool to, add slides on the beds or do, there's all these different things that you could make it even more over the top. And so that's one of the things to keep in mind when you do have a market like this where there's just absolutely nothing stopping somebody from just doing the same thing, nearby, other than, the time, capital, and that's about it. So okay, let's wrap it up. What do I think? Am I going to buy some of this? I'm very tempted, right? I love it when they have in-place income and that they have a good number on the revenue side, even though they're undershooting the in-place income by quite a bit. I don't love it. The no barriers to entry nearby, I think, is problematic. I don't love the appraisal side. Like, I'm pretty sure that they have an appraisal contingency, even though they didn't include it in the documents. Like, I'd be shocked if they didn't have that. But at the same time, I never want to make an investment just making an assumption like that, and not being able to find any good third-party comps bothers me quite a bit. Right now, obviously, yeah, I could just take that $1.7 million home and make some adjustments for the additional amenities that we have here. And I think we can get there pretty easily. I mean, obviously, I have no idea what it would take to make a little man-made lake like this. I don't know. I'm not sure if this was originally man-made or not. I mean, this is, calling it a lake. It's a little pond, whatever you want to call it. But it's something that you just can't easily replicate without a ton of money being spent. So, yeah, does that make up the difference? Maybe so. But I did just get done saying I'm not buying any more short-term rentals on Mogul until I have some proven performance from the ones that I have. And I kind of think that's where I stand on this. I think I'm not going to buy any of it. It's really tempting because the property itself is pretty amazing. The fact that it is so far under, they're projecting so far under last year's, I think is fantastic. Now, the fact that the market, the revenue in the market has been, the average daily rates going down is worrisome, right? But I don't know. Overall, like it's a beautiful property. It is, yeah, I love it when they undershoot the in-place revenue for by so much. Part of me wonders, are they just doing it because they don't want this one to look so much stronger than the other ones? I don't know. Or is it really just, are they being super conservative, or are they actually worried because of the lowering average daily rents? Maybe they just really learned their lesson because of how poorly some of the other short-term rentals have performed. So they're like, okay, let's shoot way lower than what it's been doing. I don't know. You could tell that this one I'm really torn on because there's a lot to like about this property. And as much as I'm like, okay, there's no barriers to entry, it isn't just, you don't just throw up a home like this in a couple months. You have to have just the perfect spot for it and how, clear the land. And I don't know. You can. Yeah, I'm waffling a lot today. Sorry. But that's going to be true anywhere where you have a lot of open space, which is just why in general, I've always preferred to, even when I'm investing in short-term rentals, pick markets that aren't vacation rental markets. Like, it's one of the reasons I like San Antonio a lot, which is my market, is that, you can have these vacation rentals. Most of the ones that are these big homes with pools are in these sort of old neighborhoods where you can't just go and build because of the proximity to downtown and the airport and all the things. There's not just all this open land that you have to worry about somebody building one. The biggest risk is someone finds a big home nearby and then puts their own pool in and copies that stuff. But there's not just this unlimited ability to just put a bunch of these properties up. And I think we've seen that in some other markets, right? Like you see a couple real nice vacation rentals going in our market. There's a lot of social media buzz. People see how great that one does. A lot of other investors jump in there. And all of a sudden you have just these markets with, huge influx of supply, not a similar influx of demand. And over time, your profits erode in those markets. And there is no backup valuation from from the perspective of the owner occupancy demand. You know what I didn't do on this one, and I always do, is I didn't look up, I'm not even going to pull up the crime map because I just think, obviously if you want to invest in here, you should look it up, right? But I didn't. I don't think it would be particularly interesting, but I didn't look at the flood map. And being near a little body of water, I always want to look at the flood map. So let's just pull that up real quick. Hopefully this loads quickly. Sometimes these flood layers load super slow on my computer. Yeah, and we're looking pretty good there. So, that looks, there we go. Yeah, you can see, I don't know if that shows up when you can see this loads slowly, but it seems like, okay, that's nowhere near where we are. This picture is pretty old, right? And that's like, that just kind of lends itself to what I was saying, right? Is that really even the same? Let's zoom out there and then look at that again. It doesn't even look the same at all. I don't know. It's something, if I were going to invest in this, I'd spend a little bit more time digging into that flood map because just to make sure that's not in the wrong spot. Let's hit search one more time. Sometimes I accidentally drag that thing. No, that looks like where it is. This just looks, it looks like it's not pinning it in the right spot. Oh, well, maybe it is. Okay, we've got that little shape right there. Yeah, it does look like it's not putting it in the right spot. It looks like it's putting it right here, and we're actually up there. So let's look at that again. Yeah, so see, I mean, see how we've got this little like backwards lowercase h, and we've got it, where was I just looking on the map? Yeah, you've got that right here. And so the pin looks like it's here, but it should really be up here. In this area is what I think. And, you can see like this has all been developed since whenever. Okay, this is a 2010, maybe. This is when their flood map was effective, but maybe that's when that imagery's from as well. In any case, it looks like we're good from a flood perspective, but it always makes me nervous when, I mean, you can see like, okay, there was just nothing out there, and now we have all this stuff. And, most of this is like lodging. These are all like little Airbnbs that have been built. Just got to keep that in mind from a new competition perspective, right? Like they're just going to continually build these nicer and nicer properties to compete. I don't know. That's why it's the industry that makes me a little bit nervous when you don't have like just the backup of, okay, this is a single family home in an area somebody would want to live eventually anyway. All right. I think that I have rambled plenty today. Let me know if you're buying this. If there's stuff that I missed, I love it when you put that in the comments or jump in the Discord and talk about it. I know there's probably a lot of stuff because I didn't put too much time into this one, unfortunately, although I've now blabbed about it for a long time. I think I had extra ums and ands, so sorry about that. Until next time, I'm going to just keep making mistakes so that you don't have to.